Good evening, traders. Today's Tuesday, March 7th. Markets are closed. Well, today we had a 61.8% retracement. I'm going to show you that in a moment. But before I show you that, why don't I show you a 90% retracement on January 19th? Yet despite a 90% retracement, we didn't crash in January, did we? In fact, quite the opposite. It went even higher. Okay, so we have to look at history to tell us what's going to happen next and not rely on our feelings. I know a lot of you guys are like, that I've heard on Twitter, but we lost so much momentum. But then when I press you for details, you can't tell me what criteria you're using to say we lost so much momentum. When the VIX can't get over 20, the red candles are getting smaller and smaller and smaller, yet you cannot say why we've lost significant momentum. When I'm going to show you facts that we've retraced larger than this, and the MACD has gone lower than where it is today, yet the down move did not resume. And you're looking at it right on your screen right now, January 19th, 90% retracement. The MACD is a lot lower than it is today, yet it still goes up. But I'm going to show you the next slide. This is today, 61.8% retracement. The MACD is only about half as low as it was on January 19th. VIX couldn't get above 20. The 4-hour MACD is still way above the zero line. It cannot go lower. When I say lower, I mean the next leg lower. I don't mean like a little bit lower. I'm talking about the next leg lower. Let me show you once again for you newer viewers who may not have been around. Why don't we look at December, shall we? This is December of 2022. This is SPY futures, 1-hour chart. This is the bear line for the 1-hour chart, the negative 20 line right here. We went below it. That's why we went lower in terms of the next leg lower, down. Since then, since that time in December 19th or 20th or so, we have not gone below that bear line. Not once. And right now, you're going to see in the next slide right here, it's already starting to curl at negative 17.49. It's not touching that negative 20 line. It's not going below the negative 20 line. This negative 20 bear line has a 100% track record of predicting the next leg lower since December. It's been accurate 100% of the time. That January 19th slide you just saw is right here. It touched that negative 20 line. But then it went rocketed the other way, didn't it? This was the 90% retracement. And it went lower. This is a 61.8% retracement. And it's not going lower. So the facts stand as they do here. There's no argument you can make that says we are going lower when the MACD has a 100% accuracy on predicting whether it goes lower. And that 100% line is defined by the negative 20 bear line, as it did in December. Okay, so just let that sink in for a minute while we move on to the hourly chart. This is the 1-hour futures that I took the screenshot 15, 20 minutes ago. See that? Negative 17.49. Here's the bear line. It's already curling, and it's starting to curl back up tonight. See this? This was closed today. This gray line, by the way, is the weekly SMA 20. That which has denied SPY in all of 2022. This red line is the weekly EMA 50. That which has also denied SPY in all of 2022. So far, we found support on that gray line today at close. Came up, and now we're making slightly higher lows on that same gray line. In some circles, actually in my circle, I call that a higher low notch. You've heard me say that in previous videos. Same thing. Same song, different verse. Okay, so by the way, this band, this weekly SMA band right here, this gray line and this red line is almost identical to December. It was that band that you're looking at right now on the screen that had the same formation in December. Okay, here's the 1 minute chart. This is tonight. This was like at close? I think so, yeah. Yes, yeah, this was basically at close. This is the weekly SMA 20. Went below the weekly SMA 20, came back and took it back, didn't it? Kissed it, bounced off of it. Went below it again tonight, came back up above it. So far, making higher lows. This is a higher low than that. So far, the weekly SMA 20, that which has denied SPY in all of 2022, is holding serve. Okay, so there you have it. Now, let me show you some what I call hidden bullishness. Notice how this is the 1 minute chart. Look how it comes up and takes, when I took the screenshot, it took this, let me zoom in, right here. Took it, and now it's on top of the EMA 50. Okay? When that sort of thing happens, when the 1 minute stays above the EMA 50, well, the longer that happens, the longer it does that, that's what starts to flatten out the hourly, as long as it stays above 0 and it stays above the EMA 50. And it does patterns like this. Which, by the way, you know, when you're in a downtrend, the 1 minute doesn't just take back EMA 50 like this. It just doesn't do it. Okay? The SMA 20 is resistance. So they are intentionally keeping this thing above this gray line, the weekly SMA 20, guys. This is all intentional. They're doing it. They're doing all this intentionally. Today was simply, actually, as of last Thursday until today, was to close the 407, 408 gap. And then today was to come down and fill all of those other gaps that it left on Thursday and Friday. 398 something, 397 something. I lost track. That's all it was. Close those gaps, fill those gaps. And now the next step is to simply resume where it left off. So it didn't have to, if you cut out the entire big move, now it's going to resume. Because why? Because on the 1 hour chart, you haven't gone below the negative 20 line. That negative 20 line has been 100% accurate the last 3 months, full stop. That's it. Until you go below that negative 20 line, the next leg lower will not happen. Full stop. Okay, let's get into the daily tweets. We're going to get into, before I do that, I want to call out the only major wick down was right here, right there, against the 5-minute EMA 50. That was the only rejection, like noticeable rejection. Okay, notice this or beige orange, the hive. That's the hive. Notice there was no major rejection. Yeah, something like this. Obviously, well, this is not a rejection. This is just a big move down because of the manipulation from the Powell speech. By the way, if you were paying attention, he hasn't even started speaking yet, and that big red candle happened. It had nothing to do with what he said. That red candle happened before he even started speaking. The markets already knew what they were going to do. They were going to fill those gaps today. That's it. Okay? You have no other, you have actually factually no argument you can make. Well, because Powell said this and that and this and that. Go back and look at the moment. Look at the 1-minute chart. He hasn't even started speaking yet, and it took a dive. Therefore, you cannot say with any credibility it's because of what he said. He hasn't even started speaking yet. That's why I don't watch the news, because the news doesn't matter. So, what I'm getting back to on this is the only wick down. It was not, the hive did not summarily reject the markets. Look at it. It came up once, twice, 3 times, consolidated under it, and then it went down. That's not a rejection, guys. That's actually consolidation. A rejection is like this. Boom. Right there. That's a rejection. This is a rejection. This is consolidation. That means the market maker did not really intend to take this thing much lower. When you don't have a you were not summarily rejected at the hive. In fact, before this was a wick, this was a huge green candle. If you're truly going to get rejected, you expect to see a wick down from whatever line you're talking about, like this. There was no major wick down from the hive, as you see here. There just wasn't. A true rejection is like this wick and this wick. Down, down, and then you don't even attempt it again. But the hive had multiple attempts, and then final consolidation. Found support on the SMA 20 while it was attempting to do it. It was finding support. That's not a rejection, guys. That's masking. That's the market's masking what they're really trying to do. Instead, they want you guys to look at this big red candle, and what I also call on Twitter is they want you to stare at the light. But they don't want you to see the hidden bullishness that's actually here. It's hidden. And as I discussed a few moments ago, you haven't gone below the negative 20 line, guys. You're only at a 61.8% retracement. We've had bigger retracements and still have gone higher. Okay, anything else to point out at a high level? Nope, let's go ahead and get into it. Here we go. Here's the big red candle. Here's the other red candle. Here's the other. Went just below the hive. Here's what I said. If it consolidates under the hive, it's going to go the other way. Well, eventually, here's the consolidation, and it did come up, but then it got rejected. But notice again, it pierced. This was a big green candle, and it pierced that hive. That tells me, that told me, I was like, the hive didn't reject it. The hive didn't reject it because a true rejection, is a wick down, wick down. Well, even like this little one here, see, wick down, well, a little one. That's a true rejection. Or like big giant red candle like this. Okay, that's a true rejection. Okay, it was right here that when I saw, yeah, okay. So it did consolidate under. Wick up, wick up, wick up, pierced it up. That's when I said, okay, I'm going to go ahead and scale more long. This is hidden bullishness, guys. Market makers want you to see this big red candle, but this is hidden bullishness. Something is keeping it up. Even though the ultimate target is lower, there is hidden bullishness. And as I showed you earlier, futures. See that? The weekly EMA, the weekly SMA 20 line, boom, it's bouncing off it, bouncing off it, bouncing off of it. That's hidden bullishness. You guys hear me talk about the SMA 20 all the time. The weekly SMA 20 especially is important. That's hidden bullishness. Okay, right here. See, look, even when it was back testing to the hive, wick up, right here, wick up, wick up, wick up. It did come back down, but again, it's showing you characteristics that it still has strength. It's just choosing not to exercise it. That is the key. But it cannot hide. I've said this in previous videos before. It cannot hide the strength it has. It's just choosing not to exercise it. It's a choice, because what it's trying to do is just fill those gaps, and then it's going to resume the uptrend. That's just the way it goes, because we haven't eclipsed or gone below the negative 20 bear line. And until we do, I'm not going to call it bearish. Okay, so right here, yeah. Well, yeah. This is a green candle. So look at the traditional rules. Wick up, down, wick up. I was like, oh yeah. So decided to scale even more longs. Now, when I saw it go down here, down right, yeah, right here, that's when I decided to cover puts, just in case. So now I'm writing calls and puts. Makes a lower, yeah, in case the MACD makes a lower low, which it ended up, it did do it right here as it was flattening out. It made a lower low because I was watching that. So, see, I'm calling this out. It's finding support on these various lines. The 4-hour SMA 20, which is right here, the gray line, the 400 blue line, which is right next to it, the 1-day EMA 50, which is this red line right here. So you see how it's finding support here, finding support, or yeah, right here. Just when you get summarily rejected like this move down, you don't find support. You just go down. So the fact that it's finding support, it just tells you that there's still something there. It's not just like, man, we are going down. See, these are the clues you need to look for that say, there's something going on here. Something's not right. This is not just a true sell-off. Evidenced by the VIX couldn't get above 20. Evidenced by the candles are not getting larger. They're getting smaller. Right? These are all observations you can make. If you choose, so long as you choose to not stare at the light. If you're just looking at the candles by themselves, like, oh, I can't believe it. See, right here, I sent this tweet out. I was like, I knew something was coming. I knew a move was coming. So it was down. But look, once again, even though it went down, it's not a major move down. Major red candle, major red candle, major red candle. See what I mean? It's like, nah, they're not taking this much lower. And you're gonna see me actually. Okay, I added puts here. It must have been. Maybe it's right here. Just comparing screenshots. So I'm scaling some puts in, just to be sure. Okay, now it was right here. See, here's the screenshot. It's kind of chopped off, but this line is equivalent to right here. It was right here when I sold my puts, guys. The 398.69 gap was filled, and so I sold my puts. And as of right now, that's where the bottom was, even in futures. We've basically gone sideways since then. Since I sold my put right there, I was like, yeah, I think that's the bottom. Sold my puts. And not only that, okay, yeah. Here's where I'm just summarizing yesterday's close. Yesterday was to close the 407 gap. Today was to close the 398 gap. And then there was even like a 397 gap. Went down here. MACD has big bullish divergence now. See, right there. Bullish divergence. That's why I sold it. I'm like, nah, we're not going much lower. That's why I sold my puts. And I think this next slide, I even scaled long. I even scaled some more. Okay, so yeah, I mean, I'm not afraid of all this market maker stuff and all these red candles. When I see other contra indications that we're not going to make the next leg lower, I just look at other signs. I just don't look at the price. And I don't look at head and shoulders patterns. I think that's just all those things you experienced traders will know. Those things can be invalidated. Head and shoulders, Elliott waves. You guys hear it all the time. Well, they can be invalidated. But what cannot be invalidated are those hidden bullishness signs. Wicks up, finding support. That cannot be invalidated because that demonstrates the market still has strength. Just choosing not to exercise it. Okay, so please feel free to follow me on Twitter where I'm giving real-time tweets. Intraday, calling the action real time. Don't forget to listen to your favorite music as you are trading, as it helps you get into the right state of mind, helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.